Meanwhile, what's happening in gold is really unprecedented. Not just this volatility, but the fact that gold is up year to date more than it's ever been since the 1970s. And again, this is not a coincidence that gold has never been this strong since the 1970s, because the 1970s, that was the last major monetary reset. And I believe now we're going through another one. In the 1970s, it was the U.S. going off the gold standard. That was a game changer. Now we have another game changer. We have the world going off the dollar standard, and they're going back to the gold standard. The world was on the gold standard before Bretton Woods, and even though they went on the dollar standard, they never left the gold standard because the dollar was the gold standard. It was as good as gold because it was backed by gold and redeemable in gold on demand.
One of the biggest fluctuations in gold's history occurred recently. Prices fell by roughly $300 in a single trading day before rising to just over $4,100 per ounce. Silver also saw a strong decline, closing the day just under $49 after reaching $55. The precious metals rally is coming to an end, according to headlines. However, according to economist Peter Schiff, says the exact opposite is true. Schiff claims that this is the launch phase rather than the crash. He contends that these abrupt adjustments are the precursors of a significant monetary change rather than indications of weakness. Schiff predicts that gold will rise well above its recent highs, maybe reaching more than $5,000. As long as inflation persists, central banks lose control, and worldwide trust in fiat currencies declines. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets. We'd love to hear your predictions. Drop a comment below.
So again, very strong, yet more negativity about gold, trying to scare people out of gold, get people to get rid of their gold or not to buy gold who might have been thinking about it. But today was the topper, because this morning, gold and silver got hammered dollar-wise like I've never seen. So gold at one point was down close to $300 on the lows. I mean, not quite. I mean, maybe down 280-ish, something like that. We got, well, maybe no, 260 might have been about the low. We got just below 4,100 on gold, and we settled at about 4,125. Now, despite this 6.5% decline in the price of gold is still above 4,000. The price that gold closed today would have been a record and was a record when it got to this price last week. So all we did is crash to the record highs from earlier last week. But I think this is going to do enough damage to the psyche of some potential buyers that they're going to be scared out of this market when it rises to 5,000 and higher. I mean, that's what this type of decline does. Now, with silver, it was even more dramatic. Silver was down about $4 on the low today, closed down about 370, back below 50 at 48.70-ish. So silver wasn't able to hold 50, but gold held 4,000 like a champ. And I really think that when it comes to gold, 4,000 is the new 3,000, because gold's got real serious money buying it. And I think there's enough money to keep gold above 4,000. That doesn't mean it can't trade briefly below it like it did after it topped 3,000. You had, times where gold got a little bit below 3,000, but it was a great buying opportunity. I think the same thing will be the case with gold. If it gets below 4,000, you want to buy it, but you don't want to wait for 4,000. 4,125 is close enough, right? If 4,000 is really the new floor for gold, if you buy it 4,100, 4,200, you're getting a pretty good price. Silver, given the fact that you have more retail investors, speculators involved, is far more volatile. So it couldn't really hold 50, but I think 50 is no longer the resistance that can't be surpassed. It was a massive double top. The market has already shown it can get above 50. We got to almost 55 in silver, and now we've had a huge shakeout, and we're barely back below 50. So I think this pullback is a great pullback. If you thought you missed the silver run, and you might have when it was above 50 and off to the races, buy it now. Immediately after you listen to this Schiff Gold market wrap, go get some silver if you haven't already done so. Take advantage of the sell-off. Take advantage of the sell-off in gold too. If you need more gold, I think 4,000 again is around the floor. We're going much, much higher from here. And, bull markets don't end. A lot of people are now singing, the funeral for the gold bull market. Hey, it's over, right? Gold is dead. Long live Bitcoin, whatever. It's over. Bull markets that have been going on for as long as the gold bull market has. I do believe that the biggest threat to Bitcoin is gold, right? And I think gold's resurgence is really the pin that's going to prick the Bitcoin bubble. Because I think what really got Bitcoin going was gold's 12-year consolidation. Because Bitcoin came on the scene in 2011, really, 2012. I mean, although on my scene, I didn't buy it, but that's when people started buying it. It didn't really make the media. They took notice in 2017 when we had the big run, up to 1,000, right? But it first came on the scene in libertarian circles, hard money circles, back in 2010, 2011-ish. And that's when gold peaked out at 1,900. And then gold really did not go anywhere until last year. Yes, in 2020, it made a marginal new high. It got above 2,000, but even that was not that much above 1,900 from 2011. And then it sold off. Gold didn't really get above 2,000 until Q1 of 2024. So you had about 13 years where gold didn't go anywhere. And a lot of people who own gold during those 13 years got very frustrated because they had expected it to go up, especially with QE1, QE2, QE3, Operation Twist, all this stuff. A lot of people expected a higher gold price, including me. I remember I was forecasting $5,000 gold back then, and we didn't get there. We topped out at 1,900, and so people were frustrated. And then they looked over at Bitcoin, and Bitcoin came on the scene, and it was marketed as digital gold, gold 2.0, a better version of gold. And lo and behold, it kept going up. And of course, initially, a lot of the true gold guys who understood gold laughed off Bitcoin. That's crazy. That's nonsense. I'm not going to buy that. But of course, a lot of people didn't know it was nonsense, and they bought it. And that bid up the price.
According to Peter Schiff, the current gold bull market is based on solid fundamentals rather than conjecture. He thinks the previous $5,000 goal might now be too low. Gold is holding $4,000 like a fortress even after the current sell-off. Schiff refers to it as the new floor, much as $3,000 once was. He claims that for individuals who are aware of what's going on, each short decline below that is actually a buying opportunity. In significant part to the dominance of retail dealers, the silver market is more volatile. Schiff, however, maintains that $50 is no longer a limit. The current shakeout around $48 is the kind of reset that typically precedes another breakout, and the market has already demonstrated that it may reach $55. This is your second shot, according to Schiff, if you miss the run over $50. Additionally, he cautions that negative Wall Street stories claiming that the bull market is finished or that gold is too volatile are psychological ploys. As institutional demand rises, big banks and the media are attempting to scare away potential buyers. Bull markets don't end on fear, they feed on it. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
Now, the world is finally, over 50 years too late, rejecting that standard, right? The world agreed to go on the dollar standard because we made a commitment to honor dollars with real gold. In fact, the gold were the dollars. The Federal Reserve notes were IOUs for dollars that were, weights of gold. Well, we reneged on that commitment, but the world didn't renege on the deal. The world was like, okay, even though the dollar is not backed by gold, which was the basis upon which we agreed to this whole system, we're going to continue to have the gold as the reserve currency, despite the fact that it's now fiat, right? That was a mistake. The world never should have done that. They should have rejected fiat dollars and gone back on their own gold standard. But they played along, and that's what enabled this massive bubble to be built up. That's why we've had this huge, gigantic, bubble economy with trade deficits and budget deficits, and everything is a function of our ability to print the reserve currency instead of having to mine it, right? We just created it out of thin air, cost us nothing, and we can suck up resources and capital from the rest of the world that are basically been patsies. They've been, carrying our water. They've been bearing the burden and allowing Americans to live beyond our means, and so they are content to live beneath their means to make it possible. Well, this is a revolution. This is liberation. And I said this when Donald Trump announced Liberation Day. I said that he was liberating the rest of the world from the burden of propping up the U.S. economy and subsidizing the indulgent U.S. consumer. And so that's what's happening now. The world is going to go back to the gold standard. That's what they're preparing for. That's why central banks are de-dollarizing. That's why they're buying gold, so they have something other than dollars to back up their own currencies. They're going to back up their currencies with real money instead of backing it up with our fiat. And this is a game changer for the global monetary system, for the world order, especially for Americans whose life standards are going to be completely upended by the rug being pulled out from under us. So this is all happening. That's why we're seeing this big move in gold. And this is not the end of something. It is the beginning of something. This is not 1979, 1980. It's 1971, 1972. The move is just getting started. And that's one of the reasons that everybody, all the powers that be, want to downplay what's happening in gold. They want to laugh it off. They want to dismiss it as a speculative frenzy. They don't want to deal with the reality of the warning that gold is sounding. And they're hoping that they can call attention to the declines to discourage people from buying it. But I want to encourage as many people to continue to buy into probably the biggest gold bull market yet, and probably the biggest silver bull market yet. This is not going to be the last time that we have a violent sell-off, but we're going to have these violent sell-offs from much higher levels than we are right now. And telling people, in fact, one of the big things they're saying is, hey, Bitcoin always follows gold. Gold goes up first, and then Bitcoin follows and surpasses it. So that's why you need to sell your gold now and buy Bitcoin, because the big Bitcoin rally is coming next. Except they promised the Bitcoin rally earlier. Bitcoin was already supposed to be a lot higher than $110,000, right? And the fact that Bitcoin hasn't been rallying with gold isn't proof that it's about to rally. It more likely casts doubt on the fact that it may ever rally, because if it was going to rally, I would say it should have already done so. With everything it's have going for it, from the Trump administration support to the Bitcoin treasury companies buying like crazy, the ETFs buying, the fact that Bitcoin isn't already much higher is a significant warning that something is wrong. Somebody has been selling Bitcoin. And it ain't you, right? There's an old saying, if you're at a poker table and you don't know who the sucker is, it's you, right? Well, if you own Bitcoin, right, and you're not selling, you're the sucker. You've been suckered into hodling by the people who are selling. A lot of smart money has been selling into all the hype that they created. And they're still hyping it up because they still have more Bitcoin to sell. And they want to convince everybody else not to sell, right? So they don't have competition. And of course, they want more people to buy, so they have some people to sell to. Meanwhile, what's happening in gold is really unprecedented. Not just this volatility, but the fact that gold is up year to date more than it's ever been since the 1970s. And again, this is not a coincidence that gold has never been this strong since the 1970s, because the 1970s, that was the last major monetary reset. And I believe now we're going through another one. In the 1970s, it was the U.S. going off the gold standard. That was a game changer. Now we have another game changer. We have the world going off the dollar standard, and they're going back to the gold standard. The world was on the gold standard before Bretton Woods, and even though they went on the dollar standard, they never left the gold standard, because the dollar was the gold standard. It was as good as gold because it was backed by gold and redeemable in gold on demand.
Comparing the current worldwide change in money and finance to the previous significant monetary reset in the 70s, Peter Schiff argues that it is historic. He starts off by reminding us that the United States pledge that dollars would be backed by actual gold was the reason the world first accepted the dollar standard. To put it another way, dollars could essentially be exchanged for gold. However, the rest of the world continued to regard the dollar as though it were still backed by gold, while the United States eventually renounced that guarantee and switched to a totally fiat system. Schiff contends that this was an error. The world permitted the United States to create a giant bubble economy, running ongoing trade and budget deficits while subsisting on the resources of the rest of the world by continuing to accept dollars as the world's reserve currency. We're currently seeing a historic reversal, according to Schiff. Globally, nations are shifting away from dollarization and toward gold accumulation. Instead, than depending on US fiat dollars, central banks are discreetly getting ready to back their currencies with real money. Because countries will no longer utilize their riches to support American consumption or subsidize US deficits, he refers to this change as a revolution and a liberation. As the dollar's supremacy in the world declines, this shift might have a significant influence on living standards in the United States. He also warns investors not to blindly follow the hype around Bitcoin. Many promoters claim that Bitcoin will soar next, but Schiff points out that Bitcoin often follows gold, not the other way around. Since gold has already started its rise, Bitcoin should have already moved higher if the story were true. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.